Okay, so for this video, I'm going to give you a quick explanation on petty cash. Hopefully it's quick. It seems like we have a lot here to explain. But I shouldn't be spending that much on petty cash because it's really not that important of an account. In my experience of as a financial analyst and accountant, I've never really paid much attention to the petty cash account. And there's a valid reason for that. As you can see, we only keep very small amounts there. $500, but it has its unique accounting, so I did want to explain it. Okay, so when you start a petty cash fund, you start off with your regular cash account, and you transfer 500 to the petty cash. This is the entry to record it, right? So petty cash is going to go up by 500 and your regular cash account is going to go down by 500. And that's pretty much the only entry that you're going to do into the petty cash account. You're not going to, as you'll see later, you're not going to credit the account, book a credit, which will lower the account every time you purchase miscellaneous items using the petty cash account. If you're going to increase the limit of the petty cash account, you'll do an entry. If you're going to decrease it, you'll do an entry. But you're not going to do it every time you give cash to an employee to purchase supplies or miscellaneous items. Okay, we'll see how we handle that. So at the end of the month, you go ahead and you get all the receipts from your petty cash account and you add them up. And let's say the receipts add up to $467, right? So your petty cash has gone from $500 to $300. In other words, you literally have not $300, I'm sorry, you literally have $33 in your petty cash account, right? So what do? Do you book the entries for all the supplies you purchased? Let's say these were the supplies you purchased. $467, office supplies, store supplies, and some other miscellaneous stuff. Do you book it out of the petty cash account? Do you go petty cash? Do you do a credit to petty cash and a debit to the supplies expense accounts? No. You do it as if you had paid straight from the cash account, right? So you're going to credit the cash account, which is going to lower the cash by $467, and you're going to recognize your expenses over here, as you can see. And then you simply take but the money left the petty cash account. It didn't leave the regular cash account. So aren't you going to be out of balance when you do your reconciliation? Yeah, but what you're going to do is you're going to take $467 out of your cash account and transfer it back to the petty cash, to the drawer over here, right? And you don't do an entry for that. You're simply going to transfer it here. The entry to recognize the reduction in cash of $467 goes here. So this entry recognizes the reduction in cash from this account, and it recognizes the fact that it goes to the petty cash account. This entry sort of pretends that we paid it directly from the cash account to begin with, which isn't true. It's going to lower the cash account, but that's not a problem. You'll reconcile because you are going to take $467 and you are going to transfer it over to the petty cash account. And the petty cash account is now going to be replenished, and the custodian is going to literally have $500 cash in the drawer, right? So because petty cash is a lot of minor transactions that transpire throughout the month, you know, it's very logical that every once in a while somebody forgets to give you a small receipt and so forth. And very often there's overage and shortages in the cash that you have here. So here's an example where there's an overage, right? So we have receipts totaling $467, but our cash is $35. So we have $2 more than the receipts say we should have. So how do we account for that? We're going to do the same entry, similar entry, not the same, similar. So now we're $465 short, right? So we're going to send $465 to the petty cash account from the cash account, and we're going to recognize these expenses here in the cash account the same way. But now we're going to use an account called cash over and short, sort of to reconcile the difference. And this is going to be for $2, which was the difference that we were over. We were over $2, so we're going to have a $2 credit over here, sort of to reconcile, to fill in the gap, right? So what if you're short? As you can see in this case, and I forgot to do the T over here. Let's see if I could do it now. Okay, that worked. So in this case, I was short, right? I was short. My receipts say I should have 33. I show that I have 30, so I'm $3 short. So we're going to go ahead and we're going to send $470 to the petty cash account. From the cash account, we will go ahead and we will put a credit of $470 in the cash account instead of this $467. And we will go ahead and book these entries here. All the expenses for the month through petty cash, we're going to just pretend that it was paid directly from the cash account, as you can see by this entry. And we are going to book a cash over and short. This time it's going to be on the debit side of $3, which is what we were short in the petty cash account. And hopefully throughout the year, if you add up the over and the short, it should average out to zero, right? Or close to zero. So some months you're going to be short, some months you're going to be over, and some months you'll be, you'll be perfectly fine, such as in this scenario here. And like I said, even though you paid out of the petty cash account and then you go ahead and you credit the cash account, it is going to reconcile because you're going to take that cash out and you're going to send it over to the petty cash account and the draw there. Okay, so that should be more than enough for petty cash. It's not one of the most important accounts in the banks, but as far as internal control is important because this is cash that is very, very easily is subject to fraud, right? Because it's right there in somebody's drawer. But that's the reason why companies keep very small amounts of money in these accounts. Okay, and I don't know if I explained what petty cash was, but it's actual cash that it's kept by somebody in the company, and it's used basically for emergency purchases. Let's say I have a presentation and I have to run over to Office Depot to buy some binders, and it's just going to cost me $30. Well, we don't want to go through the whole process of going to the accounts payable department and so forth and so on. So I just go to the petty cash custodian, ask the custodian for $30, and go to Office Depot and buy my $30 of binders, and that's it. Okay, so that's the definition of petty cash. I'm not sure if I explained it up front. Okay, so thank you. So that'll be it for chapter 7. I have a video on bank reconciliation. I have a video on petty cash. And more importantly, the rest is about reading on SOX and reading on the type of internal controls and the purposes and the reasons for SOX. SOX stands for Sarbanes-Oxley, and it's related to the Public Company Oversight Board. Okay, thank you.